Hey guys, morning. I need to change some settings on this. Wow, I said 60 FPS. I've not seen any frame drop rate, so yeah. Alright, what we just had, right, so I downloaded the stuff here. I had identified the areas last night. Took a look at how to set up, um, more or less basic idea of how to set up this easy peasy trade. We just finished management. Trade got out a little. Do have a cough. Got out a little here. Right, yeah. Most of positions on the micros, 40, right, yeah, 24.90. Yeah, you know exactly which part you wanted to have your stops. No, easy trade, easy play, continuation play. Looked at the bounce last night. We 2 minutes away from the open, so the plan hasn't changed that much. We identify the areas. We're looking to see if we could get a quick pick up on the open, either one out of two places, either in the 24-20 range. We may look for the continuation now from here. That job number was wow. And the reason we not trading it here is this is the new desktop one. If you look at the video last night, it provided a little more stability. Just can't figure out how the hell I get my global crosshairs on this. You can see the overnight and right after news, formal market being probably bears came to the basket. Only short term bears. We 1 minute away from the open, we're looking for locks to get into the market. Um, I don't think, well, we're looking at the rules from here. I know YouTube screwing up, so very care if anybody watching or not. Looking at the pundit account out there looking to trade it. This is the 30-day trial. Looking to do when you allowed to trade between those hours. This is what is the practice account rules. Um, bam 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 bam. Right, free practice account, blah blah blah. Check out the parameters. 1000. No trade in between. Yeah. Right, so we have a day loss limit 1000. Right, so this is your risk management. I've developed my risk plan. Looking to trade singles, singles, singles. Waiting for volume value and waiting for the cheap range in here to execute. Yeah, need to wait that 15 minutes to get into that trade. What I'm doing in the background, I did trade this overnight. You would see that in the trade plan. Got in at 95. Pull off a couple of good trades. Now, what would be very interesting for me, because I do have on the live, see this break of the node here. This would be the interesting point right there. Right there. That's what I have for looking for as potentially to get locked into the market. I do have a booking order sitting right out there. That's 2065. How I do have ES1 set up is using a single with a trader stuff to manage the risk. The active risk, so I trade in normal trading on both sides, so you'll see a lot less risk. So you see what I do here is I have to take the swing, low, the swing, swing low. Picked up all the volume from the overnight, using the full range of the swing. Let the market take its way back up. Just got locked in. Alright, 63s. On my life, so. Need to wait, so never to show what it is we're looking at here. So you can see exactly what it is. We divide every maximum, we pick the middle for the pull, but we're waiting for the initial reaction to split off. Those are micros, so waiting for the initial to split off. We only allowed to trade from 9:45. I'm trading singles using 12-point stops. 11.5 stops. Looking for the extended targets. Now this is only simulating for the live account. Anybody see if I have the capability of doing it. Looking for the top. Looking to do the market so and trail. To see how the trade is set up. Trail and stop on single. Cannot trade 2 contracts. Risk management does not allow that. So just being patient. I want to see basic movement in the market. I want to make sure that you have your top line up here. You can see you make sure you keep an eye on your delta, see where delta is, where delta closes. Delta up, price action is up. You just take out the lows. Once you take out the lows, you look for where you're at in the market, or where's the location of the market, and manage from there. So you engage in the market from 9:45 is the entry time. We're using it as how the live account is using a single, using a 10 to 12 point stop in the market. I'm trailing, looking for 1.1 first 3 only trades in it. There's the trigger. Wink wink. Easy start. My nose. It's killing me. My nose. Yes. Tired. Very, very tired. I just can't gauge the market because every time trying to follow top step rules. Do have my stuff running in the background. Right, so you see where the positive delta is, what the negative delta that brought down. So how much sellers you have and how much sellers you absorb. There's all the sellers there, there's the there, this is the open of the market. Still target my global first years up. Right, so this is the 950. You can see where the value area is, where it is struggling. You know where the deviation is to the upside, you know where the secondary we have here where we identify the level where the point of control is for the maximum area, you know, and then engage the market, you know, and stop to the upside, look for the bulls, look for the bears, look to see if the market flips. Alright, so you know you have a big range to deal with here, and how to enter and follow into the trade. Now this is where it talks up. I would have been if the rule was firmly open, yeah, it would have been better. I know why, but I think that is probably a little bit overcooking it with upstep doing. Now again, it's come back to what I'll be talking about when you engage the market around the 10 a.m. trip. But then you see when you have occasions like this to react in for this opening range here is very tough, because by the time you enter the market, you can see the kick on the open at the 9:30 candle. You have your opening range, but how much risk do you have? You need to enter range, and no small internal pullbacks in the market. How for me, I will execute an opening range, just look for that first 2 to 3 minutes, wait for the pullback to come to the downside, and then execute. Because if you're way up here using structure, you would be out of position pretty quickly. You will be out of position. What I'm doing here is monitoring for potential shorts. I have my areas delineated while looking to get the market, looking for where I see an absorption in the market. Yeah, a couple lines in the sand. Looking for quickly with your eyes to measure out what it is you have. Look for, this is for not the active point of control. Partially how I use the swing to delineate which part I would like to get involved on, where the risk is. Where is it? 7. Yeah. You look at the delta, you look for the extraction candles. You wait for the proper time. You're looking for your 10 o'clock execution. You're within the zone. You can see the zone is about a 10 to 12 point zone. Look for your node. You look for your node. Look for your node. Sit. Wait for it. Watch your delta. I haven't seen any negatives with delta yet. Yeah, so that's 9:45 stuff. That's what works for me at all with that rule. That rule, bonus. I know why it is too, but it's a little bit unfair to it is seeing the negative delta in the market. Wait for it. What is the risk profile here? Right, so we executed right here. Just clipped in and clipped out with points already. And expectation is for the absorption for the continuation. Now you're locked out of the market until 9:45 in live, so can't do nothing for that. There's one clip your potential, clip your risk. It's very early in the season. I went to the ship, but that's unfair. You should be able to, after if you're good enough to have a live account. Especially if you only trade in one contract or two contracts. Because mentally it puts you in a state where you need to be in the market, where you would like to be in the market, or we end up placing trades. And you would never be able to have an opening range trade if that is the rule you need to follow. You would never be able to have that. So for me, if you guys have any issues with that or as live traders, I would have a serious issue with that. Partially why I have. But mostly why I have my own account stuff. Because you would have gotten a pretty good opportunity right there if you look for this plan we look for. Up, move into your kill zone, execute, exhaustion candle, execute either the test, break at 65, and to the downside. You're locked out because you're locked out. Yeah, it's nice. Because I am doing it for the but I just trying to simulate on what you're doing between my live account. That's weird. You know the idea behind it, but right, so now it's too late to enter this trade and this, you know, already I'll show my business. So whatever, whatevs. Because always as my trading style, how I trade. The first exit is the most important exit in any position, any particular position. This market can rip back and then break against it, but we risk now I will be inputting into the market. If this market does bounce here, my risk is that all the absorption is completed here. It will be only in the inflection is completed here, and then the market hits. Nobody wants to trade within this area here now, and it bounces and goes up to the point of control. Now that is the risk looking at. Trading a margin account is always very difficult, and it's difficult to afford it because my margin account it took years to build it. Waited for opportunities like this. It was only last month, a couple of months, took out a couple 5 figures from it, but need to manage through this on it. So you see you're out of position at this point in time, you'll now be able to trade. Now would I want to be long at 24.40? No. Nope. Every Dante was looking at that this morning. The amount of risk to the downside, for me, it's too late. Because I know where the low is. I'm looking at for the market to run through, hit that 24.20 area to 2400, then manage. Now I can't join the cells here because can't join the cells. If this hits and rips against me, nope. Totally not interested in that. So that is because I said the signal for top form also they had roots. Now what I would have to do in this situation is sit there, wait because no, I wouldn't be able to take this delta bounce here because we identify there, even if we identify 2440 as the area, you need to find where that limited amount of risk is and how you're going to lean against it, how you're going to do that. It's very, very difficult, especially in a high quality environment. Because how I identified this was identified here the vacuum that was left behind this vacuum here as a TP at 45, I have a secondary TP at 20 points. And remember you can see the order flow because what we look for, see that exhaustion candle is the most important exhaustion candle. Hit shot, re-enter, know exactly how much risk you have. Boom, 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 push to the downside. So you're combining everything that you need to have. Oh, I did not open the chat. Being pissy this morning. Pissy. Yeah, because, like, alright. Prop firms and stuff, they protect themselves. Usually, the prop firms die on more stuff. Some stuff, yeah. Because you would never be able to get an opening range trade if you trade in live. Almost never, because you're not allowed to trade in the opening at the market. And for most traders, you need to be experienced, and I can understand where tops are doing that. But if you're experienced enough to have a live account, yeah, you should be able to trade the opening bell. Even in these circumstances, once you know you can prove and manage a trade, unless they would have data showing that most other traders fail it in the opening trade, that's why they would make that reason. And that's why assuming that that is the reason that they have data showing that the traders that trading with them are failing in the opening trade. That's just an assumption. I don't want to be a prophet or an naysayer to anybody or anything. And you can see where settlement was fine. Just go to settlement. That's partially why PTs are set there. You can see small flips. This is big amount of delta. Now here's where patience is required. If you're on the long side, here is where you can join the trade. Because at 47, this is possible inflection point. 47 to 50. Watch what the delta doing, watch the price reaction, wait for the close. 10 a.m. now. And again, my values are set up a little bit differently. This is where the market looks to play mind games. See what the delta doing and what the price reaction is. That is in no way an exhaustion candle to me. And the location is pretty uppy. Because yeah, at the close you have high delta. High positive delta, the market is not reacted as yet. Usually I am the guy who would take between a 955 trade. Yes, need. In my lives I am still bearish, so probably collide the way I'm looking at the market. Now out 4 contracts out as well. You can see how the this is you're not sure enough cross here. There we go. Now using the opening. This is profile within the profile situation. Is a little more difficult to read. This is where I actually zone areas. To see where the decision was made right here. Watch this area here. Watch where the price action was. Watch where the delta is. Delta. Nothing. Delta. Ejection. Now you're looking at it in the bigger picture. The bigger picture, you're looking for continuation to the downside. Easily. Meaning carry on holding the trade. One, two, three. Value. Look for the value to collapse. Want to see value. Want to see we get knocked up right in this zone here. As always, every time you take care of a 50% risk of losing trade. Where is it? Right, so I'm looking for the 10 AM trade. Looking for 55 to 60 area. It's at a 50, suppose it's at a 57.5, waiting for a 10 a.m., looking for delta in, looking for the active overnight value low. We're looking for protection to the back of this. We have it at 58.5 and the active value area low 57.5 to 55 is a potential entry. Want to see the flip and continuation to the downside. So you're in the kill zone here. If you're in 55, you're in 55. I'll be a little more patient, wait for the end of the hour, look for the trade in the most opportune time, wait for the delta to pick up a little bit and then pull off. You want to see the inflection right off at this point here if you're trading in the zone and executing live. That's what you want to see in the market. This is a single trade right there. Locked in the market using a trailing stop, trying to reduce risk, actively managing trade. Looking at it, you have 2 minutes, 10. Looking at executed the flip on the market. Now you're looking at the quick pops at the market using the trailing stop. So looking for that 10 a.m. continuation trade. You know the expectation is for hit the value area high and then pop to the downside. We executed our working order. Just want to be quickly in and out of the trade. If you're looking for trailing, use your execution based on how you're seeing the market or you're looking for value, volume, point of control, look for extended targets if possible. Because what you would like to see is a clip on the break at the 40 to come down. To do that, but using a trailing stop, which gives us enough room to trade one contract, and here, and this is the identified node. So what we are looking for is the 10 a.m. continuation trade. You're in a high volatility situation, so you know if you're trading, trade your stops. Yeah, if you're trading, because this is simulation, you're trading minis, you look for your volume profile. Now this is where you call a bit of chasing trade, but you need to have enough confidence in the system and have enough money back up. So if you lose a trade, you lose what, 300 to 400 or bucks. This is your lock point here. It's a breaker. It's 10 a.m. That's a reaction right there where you want to start to see happening. You wouldn't be able to see because you want to see the reaction start to happen here. And this is the most opportune time in the entry. I just got in live on a mini, looking for more or less the same setup. Using a little bigger stop, I have my structure stop there because I could afford to have my structure stop to that side. Looking for each side 2550, looking for that 12 points on my live account. Alright, so now I need to manage because if I'm entering at 50 to 60, 58 to 60, that 12 point initial and not allowed to move for a 12 point. I use a trailing stop here. So with the trailing stop, reducing risk, but it also put me at risk of getting flipped out in the market, meaning getting stopped out. It also means I could re-enter a trade at any point within the market. There, node, line in the sand, entry point, look for the downside move. Two ways to execute that trade is if you're patient, wait for your 10 a.m. Watch for the first bearish move, look for your delta and enter the sell stop using a trailing stop and look for pushing this. I can see where I have my TP is looking for value low, structure low also within the live environment, the US environment. Good change, looking for either flips. Watch for the point after the active point of control is. We do get stopped out, the stop is still beyond here. Don't have issues with that at all. I take a 3 point of control from the major flip that poses some difficulty for you in the trade. And so this is what you're talking about. You could get stopped out in any trade at any point, in any time. Ding, ding, ding. And you could watch where point of control first action was. That's the part of the reason we took the trade. It's 10 a.m. You have limited amount of risk. And you're only allowed to take 2 losses really. Break, break, break. Now my risk on my lives are quite up here, so I don't have issues with trading this on drive account, this is demo account, yeah. Restricted to trading small, very small in the account. You don't want to be chasing trades, so you wouldn't see me enter in a secondary trade here. Looking to manage through this trade. So you can see the pick into the market right there is 58. The delta is reacting in the opposite way now because you had positive delta, negative reaction, negative delta, negative move, positive delta, positive move. You can see the continuation for the delta there, detail of point here, detail of point there. So we're talking about the 65s. How you're looking to manage through this is looking for where the break comes. Now it's only 10:03, so you're looking for where the break comes. If the break goes against you in the high volatility situation, you don't have time to have where the actual execution is. Yeah, two potentials. What I looked for was look for the entry, push up, look for the sell stop, then enter the market. Have your stops here because you have your node as your resistance and your secondary node as your resistance to the upside, knowing exactly which part your stops are located. If you're using trailing stops still, you should be able to manage through any one out of these trades, and you don't have to have a perfect entry. This is what we're talking about. Where you place your stops is most important because you don't want to be stopped out, and you don't want to be in a trade for too long, or let trade goes against you too long. I have about $500 of risk. So you're allowed to take full losing trades or losing trades. In this position wise was 65 we was looking for early this morning. We looked to be a little bit aggressive looking at the market, looked at value area high, looked at value, got a partial flip. Didn't bother us so much, know exactly where the stops are located, managing through the trade. If we do see the support coming in at that 55 range, we know we probably just got screwed on the move because yeah, the volatility and volume location is the node that is because the identified node. Now this is the area of liquidity here. It's not delineating direction. What delineating direction is the reaction of delta in our opinion. In my lives I have right here at the 63s. I showed you earlier on the open. That's working order. I tend to work orders with bigger stops in my live account. This is a simulation for 30-day top step trades and trying to follow the rules. $1,000 on that particular day with this amount of volatility is close to traded nothings in my opinion. So I know a lot of guys would be able to trade this year. This is a 10 point, same 10 to 12 points. If you're looking at 65s, you would need to have your stops behind here, which I do have my stops here. I know I have 14 point stops on my live. Already got some money off of that. Re-entered the same two contracts here, so what I could do is break even more little profit still. in the trade on my live account. No, because trading margin is weird. Because I mean, very expensive. So the trading margin, my broker had started higher than what the CME has it. CME margin. Now this is your margin requirement if you trade in a margin account. Trading margin is a margin account is not very appreciative. Especially new traders, I blow up to $15,000 and $30,000 account when I started. Also, it's just not because you don't know the market. Sometimes it's just bad luck in the market. So that is the give and take. Topstep provides a very cheap way of getting into the market. It's not a money. Might sound like a lot of money, but as a true futures trader, it's very minimal amount of money for that type of opportunity to actually trade. So you can see the reasons for doing what they do when they do what they do. I just got stopped out there. Boom, 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 boom. Alright, stop. Break against there. 75. I lost 480 with action. Yeah. That is the opening range high. I'm right here. Okay, got there. So I got stopped at 68 or something like that. Doom, 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 doom. Wait for your next opportunity. You can see the market cool down right there. That's it. Watching structure, waiting for it. If you do see the break, that means the break is to the upside. Look for that value trade. No, this is how much risk you have. You can see where active POC is right down here. We're trading away from the POC. The delta is switched. So we had liquidity at this point here. The liquidity has been absorbed. Positive, positive, positive. Contracts are a bit low. Football trade, man. Football trade, man. Oh, 700,000 contracts. I mean, a little better than break even more on trade. Stop out on secondaries there. Once this break here, everybody stops for a place. Just wait. Move. 1, 2, 3. Look for this. Easy. Move. Yeah, I need to put that there. That there. And you're looking for liquidity. Right, see where the deviation is over here. 77. Look for a single clip right here. You see where the equal measure move will take you. You have to be able to quickly react to the market. When you see the market absorb here, this is where we're talking about seeing the iceberg orders because you couldn't see the iceberg order here. Moving crazy. Where is it? Right, there it is. Identify a node. Right, yeah. Two nodes. Wait for the market to cool off. Wait for your active profile for the absorption to happen. It will break one way or the other. Oh, this is the problem here because this would be partial support on this side. It's kind of in the middle of the range. You're just looking at the deviation pushes at that point. Just hold on. Need to go and take care of something here. Yeah, I needed to just manage through the execution. That 77 there. Took a couple of minutes. Forgot to add it into my system. About me, I put the chance but sitting right there. Need to make one small adjustment on it. I'm tipped off already at 8 points on one. Trying to set up the mechanical a little more. I mean, the minis are a little more mechanically. Get the stoppage trailing so we don't have an issue with that on this test. You can see where we're trying to take profit. I'm trying to get more than 1 to 1. If support is found, take 2 small clips at the market. Look for the rundown. We know why we're selling there of the potential deviation. If support is found here, we can't do nothing for that in the market. I'm looking for the absorption, there's a flip. You can see where the active value is lifted. So it's what we call active management. I don't really have active management on the minis this morning. What I'm trying to do is mechanically trade more right minis. And then looking to see where the market is, how the stocks would be running on the stocks. Do I have enough cash in the account for that? We know what the risk of where we trade those minis offer. And how we execute in those. Volume value, the volume pop is right there, so you're in danger. Just miss the exit on this because we're looking for more than 1 to 1 on the rules. They're going after the shock there. I've seen it already. Stopped out.
Stop filled.
They're hunting the shock there already. That is the point. The creator need to go to 1 minute to show that. Ding, ding, ding. Got skunked. You can see the amount of volatility in the market right there. Was then after came back to the node we have had set out fit. Right, this is running tight stop. Is the ball too high? 1, 2, 3. Step, step, step. One. No, I'm not suffering any live yet because I'm not shooting the trail. delta is pretty low, right? There's not icebergs or happening there. On the order flow. Be patient and wait. So how my trade is set up is I entered at 78, 90 is the stop on my end. Looking for 12.3. This morning we got a couple of nice ones off this. Took two stops. One here at the 65. Not stopped out at here, so we only stopped out at 2. I just re-added because we broke even on the second trade for here, which was the 65 trade. So you have active value on both sides, showing pretty weird because you don't have really open test at the point of control, which only does two things: make it a little more uncertain for you to take the trade. So how I did was, like, out of one of the mini here, I'm looking for this as a secondary, 65 as a secondary. Right at the pivot we're looking for. The most I could lose on live account is like $200 on that particular trade. If I do get stopped out at 90, because taking the 8 points here would give me 4 points loss on the stop. Where is the node? Right here. Let's see Dochi.
Order filled.
That is the signal there. I added the myself on the micros, not the minis.